Anya, what are you recommending? Sorry, hi, it's Anne.
Hi,
Um,
Anne.
Hi, what are you recommending to be the tax strategy for minimizing capital gains? Like, is it just a staggered payout or life insurance or what would you
No, I
say
mean,
to an owner?
it depends. It really depends on this. First of all, it depends on what type of business entity is it. Is it a C corp? Is it an S corp? If it's a C corp, there are some IRS codes, like I think Section 1202, small business stock. So there are certain things that we can investigate, take a look at. Also,
Section
it depends on
22?
the buyer. So if you're selling to an insider, a key employee, key management group, and then you can structure that sale so that it transfer of ownership occurs over a period of time, over 3 to 5 years, and then they can get an SBA loan and buy out the rest of the company. From a tax standpoint, you can then take the proceeds and do a structured sale, depending on if the seller needs those funds immediately or if they want to receive them over a period of time. So there's this thing called a structured sale, which is comes from the legal arena on structured settlements. So people get $20 million settlements for personal injury cases and all of that. And instead of taking a lump sum and paying all the tax on it, they look at their own circumstances and they might say, well, I want $1 million up front and then I want the rest of it paid out certain amount of dollars every year, for the rest of my life. And anything that's left over goes to my kids or whatever. So they have the ability to structure that. And they only pay income on the money that's actually received in the year that it's received. So structured sales, years ago, Allstate Insurance Company was handling those, and then they stopped, and then there was no structured sales for a while. But right now, they are facilitated by MetLife. So large company, what happens is all the money, all the buyer's money goes into escrow or into the attorney. But rather than the money going out to the seller, the money goes to MetLife into an annuity, and they've basically structured how it will be paid out. The seller has structured it with MetLife on how it's going to be paid out to them over a period of time. They're very flexible. Let's say you have $1 million transaction, and the cost basis, um, the being the seller's original investment into the business was $10,000. So if that's the case, then the seller's going to walk away with $900,000 plus after cost of sales, and that's going to be a pretty heavy tax burden, right? Between capital gains and ordinary income tax and all that. But let's say the seller has other outside assets that are not, so all his income is not derived strictly from the business, and maybe he doesn't need that income for a few years. So what he can say is he can literally tell MetLife as they're setting this up, and say, I don't want anything for 5 years, and then I want to be paid out $200,000 a year for 5 years or for however long that it lasts. So what that does is that 900,000 plus goes to MetLife at close of escrow. For 5 years, there's no taxable event, right? For 5 years, that just gets invested and grows. And then after that 5 year period of time, it starts paying out according to whatever they've set up. So they are very flexible in how they can be structured. And it's just one way of mitigating, your capital gains tax. So there are other strategies. I'm not a tax specialist at all. So I know that certain things exist, and I tend to connect my seller It's like, okay, you want to sell and we need to do some tax mitigation, some tax strategy here. So I'm going to have you talk to this person and we're going to work it out that way. But like I said, the more time you have, the more sophisticated those plans can get. And the shorter the period of time, the fewer options. So
So that's a division within MetLife. They offer this product called the structured sale or
yeah, if you Google
annuity.
MetLife, if you Google MetLife structured sales,
Hmm.
they've got whole page on it. Yeah.
Okay, great. Thank you.
Uh-huh. Yeah, and be careful. MetLife is legit. There are some other things out there that you'll come across that are not necessarily legit. If somebody hits you up on LinkedIn and they say, "Oh, we're going to eliminate all your taxes," we eliminate capital gains taxes, and they're talking about on a business transaction. I'd question that. You just want to run that by a good tax advisor. Have the seller connect with a good tax advisor, because there are a lot of things out there that are not so legal
Mm.
and they work for a while. The IRS eventually catches up
Mm.
and it's not pretty when they do.